Mr. Presiding Officer, I will now examine the outlook for the global and regional economies, and then the outlook for the national and Tobago economies. Mr. Presiding Officer, the international macroeconomic backdrop for the 2027 fiscal year is highly complex, leaving small island developing states particularly exposed to external shocks. According to the IMF April 2026 World Economic Outlook, global economic growth is projected to slow to 3.1% in 2026 and 3.2% in 2027, tracking well below the pre-pandemic historical averages. This deceleration is compounded by severe geopolitical instabilities, notably ongoing conflicts in the Middle East, the ongoing Russia-Ukraine war, and expanding geo-economic fragmentation occasioned by open attacks on global rules-based institutions and trading systems. These developments have triggered risk-off sentiment in international capital markets, moderately tightening global financing conditions and sustaining elevated public debt risks across emerging and developing economies. Furthermore, the IMF's Global Prospects Report notes that global headline inflation is experiencing a modest uptick in 2026, driven by volatile energy prices and trade policy disruptions before expected stabilization in 2027. As of the middle of May 2026, the U.S. Energy Information Administration recorded that the estimated Texas Intermediate oil price is at $109 per barrel, and the Henry Hub natural gas price is around $3.10 US per MMBTU. And it is worth noting here, Mr. Presiding Officer, that on the international stage, there are a few isolated public health concerns, such as the Ebola virus in the Democratic Republic of Congo and Uganda, and the scare created by the Hanta virus outbreak on the cruise ship MV Hondios. The entire world prays that these are quickly contained and controlled and not escalated into global emergencies, mindful of the socio-economic disruptions usually associated with these matters. Mr. Presiding Officer, for an island economy like Tobago, these global dynamics are likely to impact the domestic economy in the following ways. One, we will experience import inflation and supply chain friction, tight capital markets, volatile tourism demand,